You've been searching for the best way to generate passive income in your life and heard that real estate is a great way to do it. But you're tired of all the so-called gurus who are all talk and no substance. Get ready to celebrate because Kevin Bupp has spent 14 years successfully making it happen. This is the Real Estate Investing for Cash Flow podcast. Now, here's Kevin Bupp.
Hey guys, Kevin Bupp here, and I want to welcome you to another episode of the Real Estate Investing for Cash Flow podcast, where our mission is to help you build and maintain massive amounts of cash flow through income-producing real estate investments. Our guest for this week's show is a real estate expert and founder of Sugar House Investments, Brad Shepard. Now, real estate investing has been part of Brad's life since his college days. He earned his undergraduate degree in finance with an eye towards commercial real estate, interning with one of the premier large commercial property portfolio companies in the Northwest. He purchased his first rental property within months of graduating college and quickly added several more. Brad's career includes nearly a decade with a retail and hospitality startup company in Utah, the last 4 as president of the organization, guiding it through incredible growth. His experience includes management of hotel and vacation property, retail and cafe operations, as well as the development of retail and hospitality space and raising capital from both domestic and international investors. And so with that, guys, it's my honor to welcome Brad Shepard to the show. Brad, how you doing today?
Hey, doing fantastic, Kevin. Thanks for having me here.
Yeah, thanks for joining us here, and very excited to learn more about you and your company and what you guys are all about. So maybe first and foremost, Brad, for those that aren't familiar with you, maybe take a few minutes and just tell us a little bit more about your background and, before you really got into this syndication space, what were you doing there after college? I know you bought that first rental property or a couple rental properties, but sounds like you went and started working with a commercial real estate group, a startup there in Utah, and spent a good bit of time there before really venturing out on your own. So maybe give us a little bit of a background if you would.
Yeah, sure. And I'm listening to that intro, and it makes a bunch of memories flash back through my brain. But yeah, I went and got a finance undergrad. My intention was to go get a couple of years of job experience, go get my MBA towards international real estate. That was the intention. Did an internship my junior year with a firm up in Seattle, and they were doing the things like, developing malls and buying skyscrapers, both domestically and internationally. So it was a blast. It was a blast to see that kind of thing. That's where I wanted to end up as well. I came back from that internship, connected with a very young startup right there in Utah that was doing some fun stuff. It was supposed to be a student job, but by the time I graduated, we had grown it to the point that it was actually a viable, fun job opportunity for me. So I ended up staying there and spent almost a decade with that company. We had picked up a bunch of vacation rentals in some cool tourist locations. And this is pre-Airbnb. I think it's the tail end we were using like VRBO, but it was even before all of that. Using those old sites like HomeSwap or others like that just really aren't that used or popular anymore. So we were doing vacation rentals back then, and then we came across a fantastic piece of property in a prime spot there. We decided we want to do something cool there. So we actually built a hotel, a retail store, cafe, space to it, and an art gallery, and had to do some fundraising to be able to accomplish that. So I got to go travel around a little bit to meet with some high net worth folks to acquire those funds. And we ended up selling that company in 2009. Shortly after that, my wife and I migrated down to Texas. And along the way, I was always picking up my own rentals, sold those when we left Utah, sat it out for a little bit here in Texas. I came here and saw that it hadn't really been affected by 2008. And I thought it was still a bubble here. Turns out I was completely wrong, because there is such a demand, and there still is such a demand coming into Texas. So I started getting into some more of the active stuff, bought some rentals, started doing some fix and flips, some wholesaling. And after doing a handful of the flips and dealing with contractors and picking out tile and all that stuff, and realizing this isn't really what I want to be doing. And my brain just turned back to, commercial real estate. Why don't I go back that route? And so, that's was about 4 years ago, and I've been focused on commercial syndication since then, which I think is my preferred route going forward for sure.
And what did that progression look like when you finally made that decision of, I don't want to be going to Home Depot and Lowe's and picking out materials and doing these fix and flips and dealing with the pain in the ass contractors, which they are most of the time. No offense to contractors that are listening. We love you. But, what did that progression, or I guess you could say transition, look like from that to what you're doing today?
Yeah. So, I knew that I needed to really get myself more well-versed in how this could work in this environment, the idea of going and working on skyscrapers and shopping malls. I didn't have the MBA. I'm 20 years removed from college. So, okay, that ship has sailed. How do I play more where I'm at currently? I've got some experience, but how are people doing it now? So I started, just not unlike in the residential space, started showing up to some networking events, found out who some of the key players were, some of the bigger names, maybe the gurus, but they all have a book out there. So I was reading some of those books, went to a boot camp or two here in Texas, just to start getting familiar with the terminology and refreshing myself again with some of that stuff, and realizing, okay, yeah, I can do this. But when I started, reaching out to brokers and introducing myself, realized pretty quickly this is a team sport. And I've been operating with my own portfolio and ever since here in Texas as a lone wolf. And so then, okay, who do I partner with? I can't do everything that's involved. Doing syndications is a much bigger deal. And even though dealing with these pain in the butt contractors is a ton of time, that can be a one-person operation. So how do I, but you can't do that in syndications. You got to have a team. So I started looking around for team members. Again, in those networking events and some boot camps and whatnot, but eventually made some connections here in town. Friend of a friend, kind of a pathway, and was able to sync up with people who already had these systems and teams and relationships built, and was able to jump in with both feet right out of the gate.
Okay. So I know that, that startup in Utah, like you gained a great deal of knowledge and experience in the, the retail world, and also vacation rentals, or, I guess you could call it hospitality, however you want to classify it. That's still, I wouldn't, maybe not retail, but, the hospitality, or I guess the vacation rental side is such a hot market today. What made you decide to not maybe go down that path that was known, in a few asset classes that you were already familiar with, versus, I think your first dive in was multifamily, right? When you actually started doing the syndication side of things, correct?
Right. It was. And that's the primary focus as well. We've done some mobile homes and some self-storage, but we really like the multifamily.
Yeah.
It's scale. It's all about scale.
Mm-hmm.
We get these, we had a couple of Airbnbs here in Texas, and they're fun. They can be a good time. And when family comes or friends come and you've got a space for them, it's great to host, people at your own property. But it's just, the scale factor just isn't there, especially if you're talking about, a vacation rental where you've got to worry about clean sheets and cleaning in between, every weekend guest. It's just, is a challenge. I'm not saying it's impossible, but it's a challenge. When you turn to multifamily and you're talking about 300, 400 units, it's just a different ballgame, and you're able to just, the efficiencies there are just so much greater than what you're able to do in single family residential portfolios.
Yeah, I agree with you. It's funny. I get that conversation at least that once every couple of months. Like, we've got some of our own personal properties outside the company, like things that I've owned a long time, and every once in a while, I have literally like once every 3 months, someone asked me that we got a couple like nice personal properties that are like waterfront, like one's on a lake, and and they're like, why don't you do this on like a Airbnb model? I'm like, I don't like that's not an efficient model. Like, I get like
Right.
you're thinking gross numbers in your mind as far as like what this could do. It could definitely do so much more revenue wise if I ran it that way, but. I tell you what, why don't you move in, to one of the other units, and you can operate this thing for me. Then you can change it. You can do all that, because there's not many I know there's management companies that specialize in that, but you have to have some type of scale. You have to have a portfolio in order to even justify that model,
Yes.
I believe. But anyway, so I feel you. I completely understand there, and I'm sure there's folks that are listening right now that are like, I don't agree with you, Kevin. We make a ton of money with Airbnb. Well, it's just there's a lot of
more
moving
power
parts
to them.
there. Yeah, there's a lot of moving parts there.
Yeah. And I've changed, and a cleaning lady calls out sick, and who's going to go in there, jump in, and clean the toilets?
Yeah,
it was me. So I'd go in there and change the sheets. And
not even that. I think that the other part of it is like there's serious quality control. Like the primary driver of whether or not your Airbnb does better than maybe the others. I mean, locations first and foremost, right? But aside from location is quality control, right? And if you're reliant on this management company, I mean, like, that really the cleaning lady, it's not even just the management company has their role, but really it's the ones that are boots on the ground. That's the cleaning crew that goes in after, each stay and fixes things back up, identifies things that might need repair, walls got marks on it, so they can go in and, someone can come in and clean it up, or paint it, paint it, or the refrigerator lights out, little things like that. And if you don't have a overly observant like cleaning crew, then I could see where like that gets out of control fairly quickly with negative reviews. I mean, and it's nearly impossible to eliminate those negative reviews. Once
sure.
you actually start racking up, 4 stars instead of 5 stars, and just from little things that are somewhat out of your control. Anyway, I know we're getting a little granular there, but those are the type of things I think of when I think of vacation rentals, and why I just have no interest in that business model.
Right. And when you're in a trust-based marketplace like that, it's all about the reviews.
Absolutely.
And we've all done it. If you're going through, my wife and I like Airbnbs, but I'm checking out the reviews, and you start seeing a theme in there. I'm jumping out. I'm going to look at something else.
Yeah, there's five houses in one general location, and 2 have 5 stars, and then the other ones have like 3.5 stars. I mean, you're ready for 5 stars, right? And you're going to be very skeptical of the other ones, and you're going to read the reviews and find out probably why they have 3.5 stars. Anyway, so not to digress there. So let's talk about the team. You'd mentioned that you were really rolling at this solo, and you quickly realized that this is really a team sport. Doing bigger deals is a team sport. And so talk to me about really finding that team, finding those that have the complementary skill sets, that have the experience, that can fill the voids or gaps that you might have had on your side. And what does that look like? Who is the team? And ultimately, how did you find those right team members?
Yeah. I guess it would start with identifying what role you yourself want to play. I like talking to people. I am an introvert, but I like talking to people. So take that for whatever it's worth. I would much rather be out talking to people, investors, looking at deals, as opposed to being the guy on the spreadsheets and dealing with the technology side of it, running the models in Excel. My wife is a CPA. She complete opposite. She just loves hanging out in the Excel spreadsheets. Loves it. So I have her always check with run the models herself, check the spreadsheets herself, and then she gives me her green light. So you've got to have somebody who is out there building relationships with the brokers. What's the deal flow? Where's that deal flow going to come? More often than not, it's going to come from the commercial brokers. Sometimes you have an opportunity to talk directly to a seller, but that's the exception. So you've got to have this person out front who's sourcing the deals, building these relationships. Then there's these other team members who are going to be out there working with potential investors, educating them, getting them familiar with the company, the product. You've got the due diligence arm who's really just going to sit there and really analyzing the numbers, the market, the business case itself, administrative functions. Making sure all the T's are crossed and I's are dotted. For me, as I mentioned, I like being out there and talking. Primarily, I like talking to potential investors. Mm-hmm. I enjoy teaching. I enjoy sharing knowledge. Sometimes I get on a soapbox and I just vomit all over people, and so I have to be careful with that. But I really like working with potential limited partners. So that's where I've focused on. And then I've got teammates who are out there sourcing the deals, and then I've got others, team members who are helping me with on the administrative side. And so I get to focus primarily on the investor relations, which for me is, even though I am an introvert and I come home tired from those conversations, I'm coming home happy tired. If that makes sense.
Yeah, no, absolutely. And so, a lot of, you've been at this now, I guess, in the syndication side. Was it 4 years? Is that
4
correct?
years, right?
4 years. So I know that one of the bigger challenges when folks are just getting started, and you weren't just getting started in real estate, you had done some of your own deals, but it's really to do these bigger deals, is raising the sheer amounts of capital, the large amounts of capital that are needed to get these deals done. We're talking sometimes equity raises of 5, 10, and maybe even $15 million on some of these larger apartment complexes. Maybe not that much on mobile home parks or self-storage facilities, but still, we're talking multiple millions of dollars. How have you gone about attracting those potential limited partners to your group and to your investment opportunities? What have you found to be the most successful, I guess, 1, 2, or 3 methods that have allowed you to bring that capital in?
Yeah, for the first couple of years, it really was friends and family, my own personal network. And by friends, I mean that broadly. It's people that I've associated with throughout my professional career. Maybe some church associates in there as well. Just knew people who would have an interest in real estate, but weren't really in the mix themselves. They maybe were considering landlording or vacation rentals, but really hadn't jumped off the platform to do those things. And so it started there with my close network, and had fun with that. But after a couple of years and then several deals doing with that, okay, now I need more. It's time to grow this thing. And so, I've really spent the last 18 months or so, 24 months, really focusing on my thought leadership platform, making sure I'm out there in the public eye, my website, my social media, trying to attract people. And so now it's a different conversation because I'm talking to people who I haven't met before. And I know 100% they're vetting me, they're vetting the team, the deal in a way that my friends and family may not have. And I never wanted them to invest just because they knew me. I wanted them to, hear the pros and cons. I would walk them through that. But I'm starting from a different place than the folks I'm talking to now. So it's been fun. It's been interesting. It is, just like any of us, it's, it takes multiple touch points for most people to jump in. But there's a lot of capital out there right now looking for a home, and people, multifamily is popular. And so well, I don't want to say it's easy. It's not easy. You have to work your tail off. But you find a willing individual who knows they want to get into real estate in one form or fashion. Multifamily or limited partner syndications make a lot of sense.
Mm-hmm. No, I agree with you. And to the flip side of that, the capital side, let's talk about being that you're a fund to funds model, meaning that you work with other sponsors that specialize in particular asset classes. We've been talking about multifamily, but I know that you've done some mobile home park, you've done some self storage. I'm not sure if there's any other asset classes in there that you've done as well.
That's it so far.
Okay. The other side of the equation is actually finding the right sponsors to work with, vetting those sponsors, ensuring that they are the right fit. They've got the track record, they got the experience. So talk to me about, your process of vetting and finding the right sponsors that are going to ultimately meet the expectations, not just of you and your team, but also of your investors, your investors' capital.
Yeah. One thing I failed to mention, my very first step into the commercial space 4 years ago was investing as a limited partner. Mm-hmm. And if I knew then what I know now, I wouldn't have made that investment. But I learned a ton from it. And I'm glad I did do it. And it's played very well. It's helped me quite a bit as I'm going out there and talking to other potential investors, because that one went poorly. I still don't have my money back.
Oh, really? I'd like to expand. I want to dig in there because everyone always talks about the things that go well. That's only one of my questions at the end, but we're going to talk about this one. If you're okay dissecting it, I would like to, because that's absolutely important to know that that even in a incredible real estate market such as we're experiencing today, not everything goes as planned. And that doesn't mean this is a bad sponsor per se, but deals don't always go as planned. And sometimes they exceed expectations and sometimes they never meet expectations. So, right. Let's do it. It's on top of mind. I would love to dive into that if we can. Are you okay with that?
Let's do it. Let's do it. It's my war story.
However you would like to dissect it, let's roll with it.
Yeah. So that one there, first play, didn't really know. I didn't know how to find sponsors. I didn't know how to have operators. Friend of a friend, it was, I would say associate, knew them, put us all in touch. Mm-hmm. Seemed like this guy's got a track record, talks a confident story. Let's do it. We go see this property. We're a good hour and a half south of Houston. And you get to Houston, then you go south and it starts to turn a little dicey, and you keep on going further south. It gets a little more dicey, and we pull up to this property. Wow. Okay. This one's rough. This is a rough deal here. And the plan is to do a complete turnaround. It's probably 60% occupied, but there's a lot of land space that came with it as well. So the plan is to upgrade the units, the existing units, build a couple additional buildings as well. So that's going to help us, increase the NOI significantly. So a complete turnaround, and sound great. Okay, this guy seems to know what he's doing. I've got 3 or 4 people that know him and are kind of out. Nobody's really done business with him, but we all, these people kind of know him. Yeah. So yeah, let's go in. And things were going well maybe for the first 12 months or so. And then Hurricane Harvey hit, and it just wiped out the property, wiped it out. Some of the new builds were already in play, totally set that back. Of course, there's insurance there, but it's just never been able to regain its momentum. Just delayed a ton of things. I think it was just managed very poorly in getting that insurance money, getting the insurance money quickly, getting things back to rolling again. Mm-hmm. Never really got above an 80% occupancy. Multiple managers were brought in, let go, brought in, let go. And then so about, I guess maybe 24 months ago, they paused distributions. I'm still accruing. I came into that one in the class setting there so that I'm the top tier preferred class there. So it's still accruing. We've had probably 3 buyers get all the way into due diligence, and then they back out. We just had one. It was supposed to close on Monday, a week ago yesterday, a week ago from when we're talking right now. Tuesday, we get an email saying that they backed out. And so it's just over and over again. And then, I've got that money sitting there that I would love to put with a better sponsor, with a different operator. The communication is okay. It's not great. We didn't really find out about those first 2 buyers until after the fact. So it's just, the communication, the style, the deep value add, the new construction, the hurricane, just complete perfect storm of things going wrong.
Yeah. I'm going to back up a little bit and we're going to dive a little deeper. So you said, you drive past Houston, starts getting sketchy, gets sketchier, even sketchier. What do you mean by is it that it's rural or just like lower income? I mean, tell me what sketchy means. Give me the definition of sketchy in this situation.
Yeah. And I might be using that a little too liberally. It's not one of the properties we saw, one that they already had in play was an area that we felt kind of uncomfortable with. Just, socioeconomically, safety.
Yep.
Everybody's got bars on their windows kind of scenario. This one was a little bit more rural in a small town not far from the coast. The property just very run down. Just looks like a place that, you might have some shady deals going on in there. Not a place that, you and I are going to have our family stay. I didn't really get the safety, safety risk kind of vibe to it, but just kind of a gross kind of vibe to it, which in one side made us kind of excited. Like, okay, here's a big turnaround opportunity, but it was just a very big turnaround requirement.
Gotcha. And, aside from like maybe doing a better job with getting that insurance money and kind of reactivating after the hurricane, what do you think this group could have done differently? I mean, now that you can compare it to other sponsors, a good sponsor versus maybe a mediocre sponsor, like what are some of the big differences that you see from being on both sides of the spectrum?
Yeah, I was able to meet the on-site property management once and saw their marketing efforts. Wasn't impressed. It was all kind of just a guy. It wasn't a company. It was just kind of a guy that was doing it. So better on-site management for sure. Whatever systems need to be in place to work with an insurance adjuster to get things settled quickly, those systems have to be in place. I think maybe this sponsor had probably maybe half a dozen other properties in play as well. This one needed more of his attention, and it still does. So there's a distraction element to it as well. Not to say most of my sponsors have multiple deals in place at any time, but this one just needed full attention. Yeah. Communication, we'd get an email here and there. We'd get a webinar here and there. If you didn't make them a webinar, maybe there would be a recording sent out, maybe not. And so we never really felt like we were really on top of what was going on there. Distributions pause. I mean, my wife and I look at each other like, what happened? Have you seen any of those checks coming in? They had to go back and figure out what happened to this one. So it was just sloppy in my opinion.
How large was this community?
Probably originally started around a 220 unit with the scope to do maybe 3 to 4 new buildings. I'm fuzzy on some of those details, but it's going to be 3 or 4 new buildings in there as well.
Got it. And any idea why some of these buyers have backed out? The last couple of buyers have backed out?
The one from most recently was a zoning issue. Their lender balked at some of the zoning requirements there, which, that's what we hear in our updates, which I'm still not clear on why, what are we talking about zoning here? This is a multifamily commercial property. All we're talking about is selling it to somebody else who wants to run it as a multifamily commercial property. So what's the deal? And I don't know the answer to that question, but the story was zoning.
So the big question, this is like the $1 million question, is what's more important, the sponsor or the deal?
The sponsor. It's the sponsor, 100%. When somebody asks me how to vet an opportunity, start with the team. What's their track record? Get to know them. What's their style? It's a good sponsor can make a mediocre deal do better than a mediocre sponsor can do with a good deal.
Yeah.
It all comes down. I hope I said that correctly.
Yeah, no, I agree with you. It's funny. I've heard both sides of the argument. And I say that they're both incredibly important, but if I was forced to choose just one, it surely would be the sponsor. So no, that's exactly how I would answer it.
Even if it's a good deal and you're not liking the sponsor, it's a headache and you're not going to want to go, in a round two. Of course they're both important, but I start with the sponsor for sure.
Got it. Yeah, no, I agree with you. So as far as during the pandemic, we're kind of rolling out of it. And Texas is very similar to Florida. They've been kind of operating business as usual for the most part for the last at least 6 to 8 months. I mean, maybe not 100%, but pretty darn close. I think that Texas and Florida probably are the two of the states that have gotten back to somewhat close to a normalcy faster than anywhere else. And so, but have any of your investment activities changed as a result of the pandemic? Like, did anything shift within your business? Did you pause and wait and see what was going to happen? Did you notice the same thing maybe occurring from some of your limited partners that had shown an interest and now they're kind of holding back? Or just give me a general overview of what you experienced and how, if any, your business changed during 2020.
Yeah. So 2020 was we did a big, wait and see type of a year, especially there at the beginning. Lending requirements were shifting. It just felt when you're doing projections and pro formas, you're always making some estimates anyway, and then you throw coronavirus into there, and it was okay. Now, how do we forecast for this? Most of our properties did just fine, did well. Even one property we dipped from like 94% occupancy down to high 80s. We're still able to make distributions just fine, and we were able to recover. As Florida, this property was in Florida. As things started to come back online, occupancy came back up as well.
Was this a multifamily property that you're speaking to?
It was not too far away from Disney World, and so there's some colleges around there. So a lot of our tenant base was employees of the parks and students who all got sent home. Mm-hmm. And so that dipped our occupancy there for a little bit. But that one's back to just fine at this point, pre-pandemic levels. And so it did cause us pause. We didn't do as many deals as we wanted to last year. I took the opportunity to go do some additional licensing on my side to get some securities licenses and to affiliate with the broker dealer while things were paused. And so that's been helpful. But as far as the operations go, it was, we spent a good 6 to 8 months just kind of on pause, still evaluating some deals, but not really feeling gung ho about chasing them down.
Yeah.
Maybe that was a mistake in hindsight because it's back 100% at this point, and there were some good deals to be had that we maybe were a little too conservative on last year.
Did you see? I never really saw any like discounts, if anything. Actually, at least in our space, so we're in the mobile home park space. I mean, the complete opposite happened. Prices literally shot through the roof, and
there you go.
Very, very interesting. Which
and that's what I mean. Not necessarily discounts, but they were deals under normal circumstances we would have looked at further, but we shied away from them. And so, that was, I think, looking back. Of course, hindsight's 2020, but looking back, we should have pursued those deals because the world didn't fall apart.
Yeah, but you know how I feel about that. I never try to, live with regrets, and there's always a next deal. There's always another deal around the corner. And so, for those that are, might be also kicking themselves and saying, we should have bought, because now look at the real estate market. It's the hottest it's ever been, right? I mean, whatever. There's always another deal around the corner. And there's also always another crash around the corner, right? I mean, there's always changes that are going to be happening, and you don't have a crystal ball. And so I think you just have to stick with your gut and with the fundamentals. And sometimes, we can, no one could tell. No one would have been able to forecast. I don't care, how deep into economics or what kind of economic degree you have or what have you. No one would have been able to forecast a year ago that we would literally be in the hottest real estate market ever today. It doesn't make any sense. It does. Now that we're here in it, we're like, oh, I see why. It's pent up demand. I mean, like a year ago, the world was ending, literally.
Exactly.
In some parts of the world, it's still ending. I mean, like it's still going to complete lockdown. So, anyway.
And for pre-COVID, a year or two prior, everybody's asking the question: okay, a crash has to be coming. When is it going to happen? When is it going to happen? We've been on this hot trend for coming up on a decade. It's got to come sooner or later. And then COVID hit, and we all thought, oh, here it is. Here's the big crash. and we slowed down for a couple months and then took right back off pre-pandemic levels. Thought, okay, that was not the crash. We're just going to continue how we were. So we all looked around like, all right, we're going. We all survived. Let's jump back in.
So stick with the fundamentals. That's it.
Absolutely.
And invest in what makes sense. And if your gut's telling you otherwise, move on to the next deal, because there's always another deal around the corner. Well, Brad, this has been a lot of fun having you here. Really appreciate you coming to the show. For those that want to learn more about you and what you guys got going on, where's the best place to find you?
Yeah, the best place is always be my website, sugarhouseinvestments.com. I do like hanging out on Twitter. I'm at Brad Shep on Twitter. But best place, sugarhouseinvestments.com. You can find all my contact methods there.
Okay, awesome, Brad. Well, it's been a lot of fun having you, man. Thanks for coming on the show.
Hey, thanks a lot, Kevin. Great talking with you.
Alrighty, guys, that's all we have for this week's show. So until we meet again next week, this is your host, Kevin Bupp, wishing you huge success. Take care.
Congratulations! Now you've got more of the best tricks of the trade in building massive amounts of passive income from real estate. For more amazing resources, visit realestateinvestingforcashflow.com, and we'll see you next Monday morning.